Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of June the 19th, 2017. Now to get started this week we're going to begin where we always do with that all-important US dollar index. Now we've come out of the Fed meeting with a very mixed bag. It could be determined that the Fed is hawkish, but at the other side of that I'm not sure I'm in complete agreement with their view of the economy. Now what they're saying is that the slowdown in the economy, some of the jobs numbers, the macroeconomics are all transitory, but again I'm not necessarily in agreement with what they've said, but let's go to the indicators and see what we're looking at. Now what I've talked about are known periods of dollar weakness between the 14th and the 17th of the month. The dollar continues to remain in a very tight channel here between the 96.20 area and the 97.50. We're looking for a break of this particular channel for the next move. Our VantagePoint indicators, our neural index is higher. Our predicted short, medium, and long-term differences are above the zero line. We do have a crossover in the predicted MACD, but below the zero line. Now, of concern to me, when we go to the indicators, we can see that we've had a failure at the 60 level on the predicted RSI. It's come up and kissed it and then moved away from it. That could very well be a leading indicator that there is no momentum to the upside, and basically it's further suggesting that the market may not necessarily agree with the Fed's interpretation of some of the economic data as of late. So for now, the key vantage point level comes in at 96.92. We're closing at 96.86 below that key level, so the dollar still carries a slight bearish tone. Now, when we look at that and apply that to currency pairs like the Euro-US, basically the Euro continues week after week here in the area that I've talked about above 113. We would have to clear this 113 area. Now, when we look at the Euro, again, we can see our swing high here about the 113.20 area. We continue to fail at this particular level. So when we look at this right now, what are the indicators saying here? We can assess that the market has managed to close back up above that critical VantagePoint 18-day predicted moving average at 111.73. Now again, with that close of 111.97, it does hint that we could see a break of this area, but we need to get above 113, 113.20 and stay above this area. And the indicators are not necessarily going to disappoint here. Now our neural index is back up, so the short-term move is to the upside, but our predicted short, medium, and long-term differences remain to the downside. And again, we've got a failure at the predicted RSI to hold below that 40 level. We are above the zero level on the predicted MACD. So for now, with the Euro currency, my only concern is you can see that we've broke through this trend line, but the VantagePoint 18-day continues to hold. So as long as we hold above 111.73, there's a mild bullish tone here, but very, very mild. The Eurozone not in any better shape than the US or any of the other countries. So again, that 113 area that I've talked about over the last 3 or 4 weeks continues to hold. So we sell into that area as long as we possibly can, and if it breaks above there, we cut and we go long. Now with US Swiss franc, again, this mirrors the dollar index, and it also mirrors the Euro-US pair. The Euro-US pair goes up, US Swiss franc goes down. So when we look at this right now, the close of 97.31, just barely above that 18-day predicted moving average. Our predicted differences are holding, but once again here, guys, you can see we have failed to hold above that 60 level on the predicted RSI. Once again, another indicator that we could have institutional flows coming in against the US dollar at the start of the week. Now, when we bring in the British pound, it's going to be a very, very choppy political week as the Brexit talks start this week. Probably going to cause very wild swings in the British pound, so be very careful with this one this week, guys. That's what I'm telling my own direct clients. Our key vantage point level coming in at 128.21. That's the key level. We're closing again 127.76 below this area. We did have a test of that 18-day Wednesday of last week, but we immediately pushed lower. Now our demand area is sitting down at 127, supply basically being filled at 129. 79.50. So we would continue in this particular scenario to buy the bottom and sell the top until we break. Now our neural index is up, but very interesting, we've got a medium-term predicted difference crossing over our long-term predicted difference right here in the opposite direction in which the market's been moving down, warning that we could be getting ready potentially to move higher. Our predicted RSI is coming out of oversold territory. We're at 44.3. We want to see this above 50 at the very minimum if we're going to think about buying this pair. But again, to start the week, it's going to be a very, very choppy week. So 128.21, that's the area we want to watch. If we continue to fail into this area at that key vantage point level, shorts absolutely will prevail. Now, when we look at the dollar yen again is also going to see a very choppy week ahead, because in most cases when the dollar sells off, so does the S&P 500. That's the direct intermarket correlation. So if we see the euro currency rising, that could signal that basically the dollar yen is getting ready to sell off again. So we've penetrated through this demand area, this upper trend line, the supply area, excuse me, but we couldn't close above it. But we are closing just slightly above that key vantage point level at 110.60. So to begin the week, 110.60 is the key level. If we can't hold above this area, then we're going lower. But if we can hold above 110.60 and we can break through this trend line area and close above it for 1 or 2 days in a row above the 111 area, then that will trigger a bigger move, probably back to the 114 area. Now, as we come into our three main commodity currencies, I talked extensively last week about this channel we're playing in, and what I suggested was whichever way this breaks, we would be immediate sellers or immediate buyers. However, the indicators in last week's video, basically from VantagePoint, said that the trend line on the bottom side of this channel that we're dealing with here is going to break to the downside. This is an excellent call, in my respectful opinion, from VantagePoint. And again, being already short, it simply allowed me to add excessive shorts to this, because this is probably one of the easier trades you're going to get here. And again, with that triple EMA cross, we've had multiple failures along that key vantage point level. However, now we may have a potential problems. Our short-term indicators are rising as the market's moving lower. We have a swing low here down at 132.20. 131.80 was the swing low from last week after the Fed, so that's the area we want to watch next week. If we can hold above 132, between 132.20 and 131.80 are critical levels of support at this particular time. If we break below that, we're going to go even lower. My concern here is oil prices are absolutely getting pummeled here. So with that, it's going to be very difficult for the Canadian dollar to extend gains to the downside here. So US Canada, just keep an eye on it between 132.20, 131.80. But the indicators are heavily oversold, and I will point out that a substantial part of this move on this break of this channel came from comments out of the Bank of Canada suggesting the Canadian economy is doing much better. Some of the stimulus is coming out. Once again, guys, I'll tell you guys what I tell my own direct clients: never trust what a central banker says. So whatever they have said, they could turn around next month or next week and say the exact opposite here. So for now, we know those key levels, but the indicators are heavily oversold, and the shorter term indicators from VantagePoint are on the rise. Now, with Aussie US, I think we should be able to make a push here towards the 77.50. I talked about this critical area in last week's area. The key vantage point level, 75.19, looking good there as we're extending higher. The upside target would be the 77.50. Our predicted short, medium, and long-term differences, our neural index strength indicator, all pointing higher. And once again, with that break of that predicted MACD, the zero line on the predicted MACD looks very good. The predicted RSI, we've moved up, we've had a retracement, and then we've extended higher. So we still see momentum here, but we are moving towards overbought. So a corrective move could be likely in the days ahead. 75.50, our support, excuse me, in this particular case starts at 75.97 and goes all the way down. We would be buyers, excuse me, down to 75.19. Now, with New Zealand, we're coming up to a known swing high here also, and that's coming in right around this 73.50. You can see that we kissed it, and then we failed, but we're holding very firm on this VantagePoint 8-day predicted moving average at 72.10. You can see that the market's running right along here, bouncing off of this area every day. Myself and my clients, we've been buying this on a regular basis based on this signal. You can see that we tried to break through the 60 level to the downside on the predicted RSI, and VantagePoint simply was not falling for it here, guys. The indicators from VantagePoint are warned us to stay long. So for now, again, between 72.10 and 71.44 is basically your buy zone, as long as we hold above that key VantagePoint level at 71.44.